You're welcome to my channel Promotion for Sure. In this video, we are going to talk about overview of credit management. In this chapter, you are going to learn the importance of credit and its historical background in India. Types of credit, types of borrowers and principles of lending. RBI influence and credit management of a bank and components of credit management. So if we talk about historical background of credit in India, the banking industry started actually to take its shape in India after nationalization of banks in 1969. It was a watershed event in the history of credit flow from the banking sector. The concept of priority sector became an integral part of the banking system as RBI ensured that a substantial portion of credit flows to the priority sector. Priority sector means a sector which requires attention, a sector where big business houses are not there, but poor people, farmer, small lenders are there. What are some of the important principles of credit? Certain basic principles of lending operations are safety of funds. No matter what business you do, whether you're a bank or a money lender, your first priority should be the safety of funds, the purpose, the profitability, liquidity, security, and risk spread. Now, how many types of borrowers are there? A borrower can be an individual, a sole propriety firm, partnership firm, and a joint venture, Hindu undivided family, companies, statutory corporation, trust and cooperative societies, clubs and associations, local authorities, limited liability partnership, and any other legal entity. Now, the laws applicable to all these different kinds of borrowers are different. Individuals are governed by Indian's Contract Act. Partnership firms are governed by Indian Partnership Act. Hindu undivided family by customary laws pertaining to Hindus. Companies by Companies Act. Statutory corporations by the acts created by them. Trust by Indian Trust Act. Public Trust Act. Now, what are types of credit? There are two types of basic bank credit, which is either fund based and non fund based. In fund based, there is actual transfer of money from bank to the borrower. In non fund based credit, there is no transfer of money but a commitment by the bank on behalf of the client, which may result in future transfer of money to the beneficiary. For example, bank guarantee, letter of credit, co acceptance of bills, forward contracts, and derivatives. Credit can also be classified on the basis of purpose like working capital finance, project finance, export finance, and crop loan. So, what are the components of credit management? The most important aspect of credit management is the loan policy of the bank. Each bank formulates its own loan policy, and sanction of any credit proposal has to be within the framework of this policy. The loan policy normally contains the exposure limit for the single borrowers and groups, discretionary power at various levels of sanctioning of credit proposal. It involves various process such as appraisal. So before the lender agrees to give his money to a borrower, as per a proposal, an appraisal is done. The background credit history, market reports of the borrower is checked. The financial track record, the techno-economic feasibility report, securities available, their value, and how they'll be able to realize. So this is all which happens in appraisal process. Then there is delivery. This relates to the legal aspects of documentation and creation of charge over the securities. Then there is control and monitoring. Now, it not only ensures end use of the bank funds but also ensures safety of it. There is credit risk management. Credit risk is a major risk faced by the banks. So there should be suitable policies to identify, measure, and control this risk. There is also a framework of restructuring and rehabilitation and recovery in all the banks. There is also another aspect which is called refinance. This aspect of credit management assumes importance in times of tight liquidity position. There are norms for availing refinance from NABARD, SIDBI, RBI in respect of certain priority sector advances. However, if a bank avails of refinance for eligible advances, the risk remains with the bank. Now, what is the role of RBI guidelines in banks' credit management? Now, RBI ensures that the end use of the funds is done properly, and it is done by monitoring the funds flow. Monitoring end user funds may broadly include meaningful scrutiny of the periodical progress reports, regular visits to the units, inspection of securities charged hypothecated assets, periodical scrutiny of the books of accounts of the borrowers, introduction of stock audits depending upon the extent of exposure. Now, what is priority sector? RBI, as a regulator of banks in India, decides about the sector which are included in the priority sector. It is the minimum percentage of total credit of a bank which should go to this sector. Priority sector lending by commercial banks is monitored by Reserve Bank of India through periodical returns received from them. The main sectors included in the priority sector are agriculture, finance, finance to micro, small and medium enterprise, khadi and village industry sector, loan sanctioned by banks to microfinance institutions for on lending to MSME sector, overdraft extended by banks after April 8, 2015 up to 5,000 under Pradhan Mantri Jan Dhan Yojana, factoring transactions on with recourse basis, housing finance, education loans, social infrastructure, export credit, renewable energy, etc. So these are the priority sector areas through which the banks can sanction loans. Now, what are the targets of priority sector? The target and sub-target set under the priority sector lending for domestic and foreign banks operating in India are based on the adjusted net bank credit, which is called ANBC, or credit equivalent to off-balance sheet exposure. So the total priority sector target for domestic banks and foreign banks with 20 branches and above is 40%. And for foreign banks with less than 20 branches, it is 40%, which is to be achieved in phased manner by 2020. Now, out of 40%, the commercial banks and foreign banks with 20 branches and more need to give 18% within agriculture, out of which 8% is prescribed for small and marginal farmers. Micro enterprises need to get 7.5%, and advances to weaker section includes 10%. Now, weaker section under priority sector includes many categories of people: small and marginal farmers, artisans, beneficiaries under government sponsored scheme, scheduled caste, scheduled tribe, beneficiaries of differential rate of interest, self-help group, distressed farmers, distressed person other than farmers, individual women beneficiaries up to 1 lakh per borrower, persons with disabilities, overdrafts up to 5,000 under Pradhan Mantri Jan Dhan Yojana, minority communities as may be notified by Government of India. So there are certain guidelines of priority sector as well. Now, that is called micro, small Medium Enterprise Development Act, which is called MSMED Act 2006. Now, the Act provides comprehensive rules pertaining to both manufacturing and service enterprises in the MSME sector. Now, enterprise engaged in manufacturing or production, processing, or preservation of goods is classified as micro enterprise if the investment in plant and machinery does not exceed 25 lakh. A small enterprise if investment in plant and machinery does not exceed 25 lakh, I mean, sorry, is not more than 25 lakh but does not exceed 5 crore. So, micro enterprise, it should not increase by 25 lakh. Small enterprise from 25 lakh to 5 crore is the upper limit. And for medium enterprise, it should be between 5 crores but not exceed 10 crore. What? Investment in plant and machinery. Now, similarly for services, the micro enterprise investment in equipment should not exceed 10 lakh. Small enterprise 10 lakh to 2 crore, and medium enterprise 2 crore to 5 crore. Now, there are certain common guidelines and instructions for lending to MSME sector, such as acknowledgement of loan application to MSME borrowers, collateral. Banks are mandated not to accept collateral security in the case of loan up to 10 lakh extended to units in the MSME sector. So the banks have to extend collateral free loan up to 10 lakh to all units financed under Pradhan Mantri Employment Generation Program administered by KVIC. Composite loan. A composite loan limit of 1 crore can be sanctioned by banks to enable the MSME entrepreneurs to avail of their working capital and term loan requirements through single window. There is also called credit linked capital subsidy scheme for technology upgradation of micro and small enterprise up to 1 crore. The rate of subsidy is 15%. Now there is also credit exposure norms which is broadly classified for individuals and group borrowers. So the exposure ceiling limit for micro, small and medium enterprise is 15% in case of single borrower and 40% of capital funds in case of a borrower group. Now capital funds consist of tier 1 and tier 2 capital. So the credit exposure to a single borrower may exceed up to the exposure norm of 15% by additional 5%, and to borrowers belonging to a group from 40% by additional 10%, provided the additional credit exposure is on the account of extension of credit to infrastructure projects. It has to be done only by the after the approval of the board. So individuals can get 15 plus 5 in case of infrastructure and group 40 plus 10 in case of infrastructure. For NBFC, single NBFC should not exceed 10 to 15% respectively of the bank's capital funds. Exposure of a bank to infrastructure finance company should not exceed 15% of its capital fund. Now, there are also certain guidelines on the interest rates, how much and what is the frequency of interest rate which can be charged by the banks. Now, there shall be a comprehensive policy on interest rates on advances duly approved by the Board of Directors. All rupee loans sanctioned and credit limits renewed after April 1st, 2016 will be priced with reference to the marginal cost of funds based on lending rate. Banks shall have the freedom to offer all categories of advances on fixed or floating interest rates. Now, what is marginal cost of fund-based lending rate, MCLR, which comprises of marginal cost of funds, negative carry on account of CRR, operating cost, and tenor premium. What is spreads? Banks should have a board-approved policy delineating the components of spread charged to a customer. Now, interest rates on loans, actual lending rates will be determined by adding the components of spread to the MCLR. Now, there are certain exemptions from MCLR for loans covered by schemes specifically formulated by Government of India. For working capital term loan, funded interest term loan, various refinance schemes financed by Government of India or formulated by Government of India. So this is something which is definitely an important aspect which we all should know. So MCLR is reviewed every month on a pre-announced date. Reset of interest rate also happens. It shall happen once in a year, or it depends upon the organization or banks to banks. So resetting means after 2 years or 1 year, you get an opportunity or the bank reviews the interest rate and may increase or decrease it. Periodicity of change charging interest on advances. Interest at a specified rate should be charged at monthly rest. Banks should charge interest on agriculture advances for long duration at annual rates. Penal rate of interest. Charging penal rate of interest with the approval of board of directors. In case of loan to borrowers under priority sector, no penal interest should be charged for loan up to 25,000. Now, monetary and credit policy. We all know that RBI announces its monetary and credit policy at the beginning of the financial year and credit policy twice a year. There are certain statutory and other restrictions on some type of credit. When we talk about delivery of credit, in case of borrowers enjoying working capital credit limit of rupees 10 crore and above from banking system, the loan component should normally be 80%. There is also a provision of income recognition and asset classification. So there is 9% of capital adequacy ratio, which is minimum. Now, the banks have to classify their assets depending upon the conduct of each account. A provision out of bank's profit has to be made to provide for the possibility of default. The amount of provision depends upon the classification of assets. There are norms prescribed for not recognizing some of the perceived income so that the profit of the bank is not inflated. Now, transfer of borrower account from one bank to another. Bank should put in place board approved policy with regard to takeover of accounts from another banks. In addition, before taking over the account, the transferee bank should obtain necessary credit information from the transferor bank as per the format prescribed in the circular dated December 8, 2008. Fair Practices Code for lending. Now, these guidelines pertains to application for loans and their processing, loan appraisal in terms, conditions, disbursement of loans, post-disbursement supervision, etc. Now, the banks are also advised by RBI they must transparently disclose to the borrower all information about fees, charges payable for processing the loan application, the amount of fees refundable if the loan amount is not sanctioned or disbursed. There is also Banking Code and Standard Board of India. It is a bank's commitment to micro, small, and medium enterprise. It's a voluntary code which sets minimum standards of banking practices for banks to follow when they are dealing with micro, small enterprises as defined in the Micro, Small, Medium Enterprise Development Act 2006. Now, let me ask you certain questions which will definitely increase your perspective. Question number one. As per RBI guidelines, the turnover method of assessment should be applied for working capital limits up to rupees dash in case of MSME. Question number two. Floating interest rate on new advance is linked to which of the following? The total priority sector target for foreign banks operating in India is dash. So I hope you must have really learned a lot of things from this video. If you like this video, you can press the like button, subscribe to my channel, and share it on social media. Help us to spread education in this beautiful world. Thank you. Have a great day. Bye-bye.